Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world every Friday at 12 p.m. Eastern. Gerald, it's just me and you today, and you're in transit.
Live from anywhere. We'll do it live. All right. It's so exciting to be coming to the audience again on a Friday. We have a lot to talk about. Crypto is moving and shaking, so I'm excited to dive into it.
Where are you exactly? I know you're heading back to DC, but where on the train line are you?
Elle, it's tough to say. I am somewhere between Philadelphia and Baltimore.
Okay.
That is about all I can give. Okay, and the camera wants to highlight our guest going through the door back there. So we mistimed the jump, and we're here, and it's gonna be fun.
I love it. So yeah, we'll just give the audience a warning. So Gerald's camera does this weird thing where it zooms in on other subjects in the picture aside from the person it's supposed to be focusing on. So that could be a fun little exercise that we do here today. Try and spot the
We're gonna
guests in
have
Gerald's shot.
a lot of unplanned guests today. It's gonna be great. Yeah, I'm in the cafe car.
Exactly.
Anything could happen. We're doing it live.
Yeah. Well, let's talk about our guests quickly because I do want to get to the Coin Center dinner that you and I were both at last night and talk a little bit about what happened there. But our guests for today are going to be, well, Jacquelyn's going to join, right? So Jacquelyn, who's obviously everybody knows is our co-host, our third co-host at Crypto in America. She's over in Korea, or actually I believe she's in Bali now, but she was in Korea for Korea Blockchain Week. She joined us earlier in the week to do a taping to talk about what she experienced over there. She hosted a couple of panels, broke some news, actually, my girl, proud of her. So we'll be playing that for you guys coming up. We also have Grayscale's Managing Director of Research, Zach Pandl, to talk about crypto ETF season. The market's kind of throwing up on themselves. Let's check the markets right now. Speaking of, Gerald, how are we doing today? Let's see. Bitcoin, let's say up slightly in the last hour. We're below 110,000. So I think that's all you need to know, right?
So look, not financial advice, but I think we're at a resistance point. I think the macro, it's actually ironic. I think Zach is going to dig into it. The headwinds are not bad news. It's actually good news in the macro data showing up and telling us that we're not going to get more rate cuts. So I know Zach is going to dig into that and have that conversation, but no, it's overall it's good. The irrational greed part of the cycle is probably thinning out a bit, and so I'm excited for all the institutional adoption, all the things that are
Yeah,
happening on the real side of things.
we'll get Zach's take. Yeah, we'll get Zach's take in just a moment. I do want to play a soundbite from Hester Peirce in just a second, but let's tee that up by just giving a little scene setting here. You and I, Gerald, were at the Coin Center dinner last night. Now that's the annual dinner hosted by Coin Center, which is a nonprofit organization in DC, right? It's one of the, I guess, would you consider it a crypto trade? I don't know. I kind of always associate them with like the BPIs and the SPIs and the BA associations, but I guess they're slightly unique on that front. How would you classify them?
You can call it a think tank. I think Niraj and Peter would be satisfied with the think tank designation. No, but they're intellectually smart guys, and they've been doing it for a long time. So it was great to see everyone, and I know we'll jump to that clip.
Yeah. Okay, well, let's roll that thought from SEC Commissioner Hester Peirce, who absolutely killed it in her keynote last night.
Collection by Bandman. He's reading a book called Bitcoin is for Bad Guys, and he's pulling his hair out as he thinks, if only Bitcoin didn't exist, we wouldn't have any crime at all. We should ban it. Little does he know that the cash in his pocket was given to him by a criminal, the proceeds of her crime, and the check that he's about to drop in the mail is going to get stolen.
She was hilarious. I've said this to people. We had her on the show. Obviously, she was our first guest here on Crypto in America when we launched back in March, and she was fantastic then. I feel like she is just like she's so funny, right? Because she's so quiet, and then she gets up on stage And she just delivers this absolute banger of a keynote. She's making fun of the entire industry, completely trolling everybody for their stereotypes. I mean, you and I were sitting near each other. We were just dying of laughter. I mean, it was
Yeah,
hilarious.
what's amazing about this phase of her career is that I feel like she's over I've seen Commissioner Purse speak several times, and it's always very buttoned up. She's very professional and
Yeah.
she's very analytical. And I think last night she was just having fun with it. It was like, you know what? We did all the hard work. I want to tell you guys what I really think of you. And it was a blast to see that side of her, because it's not all the time that you get to hear that side of the commissioner. So yeah, really enjoyed the honest takes from her last night. It was fun.
Yeah. Yeah. It was tongue in cheek, but honest, right? You could kind of feel that. I was like, there were some digs in there. She was like, I know you guys are going to be mad at me after this. I'm going to have no friends left. But I also thought it was notable that she was, wearing a t-shirt that had code on it, right? I think Peter and Niraj called that out. This is an SEC commissioner. I mean, this is someone who is regulating the space, but someone who is not afraid to come down to the industry's, sort of level, right? And come and have an honest and frank conversation, not just at the SEC, but like at parties and at like these dinners that the industry holds, and just, be able to talk and joke and actually bring up the past too. I thought, she kind of apologized. Actually, she did explicitly apologize. She said, I'm sorry for failing to convince my former colleagues about the merits of this industry. And she encouraged people to keep building, which I just thought, wow, like this is all coming from, the head of the SEC task force at this agency that the industry hated for so long. It's just incredible to see.
Yeah, and look, I mean, she's so pragmatic, and I think that's what we were missing in the previous administration. Is she understands the nuances of the industry. She understands that we deal with the good and the bad, and I think her take last night was, again, it was just one of those, like, she's not going to ride off into the sunset and keep her bees. She's going to do something else, and I'm so excited to see what she does. We're going to have her on as soon as she takes that next role. But yeah, it was very exciting to see someone honest and with some depth, just come to the audience like that, because so often you when you're at an event like that, you expect to hear kind of hollow remarks and like, oh, we're making progress and America is great. And so it was really fun to hear her kind of lay it all out there and give us a bit of the other side of Commissioner Hester first. It was a lot of fun.
Yeah, definitely a breath of fresh air. Before we move on, aside from Hester, what was your other favorite part of the night? Aside from the food, I thought the food was really good.
The food was very good. We will give a shout out, Seth from Ledger. You're going to have to come on. We will give a shout out. So one of the famous aspects of that dinner is that Ledger, which is a French company, a few years ago was very upset about the quality of the wine, and so they became the permanent wine sponsor of the Coin Center dinner. And so I thought the wine was good. I thought the company was better. It's really one of those things like. It's exciting to see the industry come back to its roots, right? I think Peter Falkenberg, who's the head of Coin Center, said something about the last time that they did it at the Plaza was maybe in the Obama era, or several years ago. And so it's very exciting to see the industry kind of come back and be in the position it's in.
Yeah. Yeah, for sure. Personal favorite of mine. I love the Eloise books growing up, and the Plaza is the home of Eloise. And she had her portrait in the lobby. I took a picture with it, and I was called a geek, but that's okay. Still love it. Anyway,
Love it. Love it.
Let's get to some of the top stories of the week. So let's kick off with the Senate Banking Committee's markup. I think it's pretty clear to the industry now that the markup that was scheduled for the 30th, which is next week, is likely not going to happen now. I think it's a combination of the shutdown, obviously, which is scheduled to take place on Wednesday, I believe, the 1st. And also just, I think in terms of process, right, we've kind of seen that, it's been hesitant, the Democrats coming to the table to kind of like take part in these talks and negotiations. The Republicans are saying, okay, we want to get this done. We want to have this markup. on the 30th, and the Dems are saying, okay, let's slow things down. Let's, we want to be a part of this process and make it bipartisan. But I was talking to some people at the dinner last night, and many of them were kind of the opinion that, the September 30th deadline was always a bit aggressive, but it served a purpose in getting the Democrats to the table sort of like quickly. But how those negotiations play out, between now and I think the date floated was like around October 20th, like that week. But how those negotiations play out between now and then remains to be seen, I guess.
Yeah, I think this is like a key sort of feature of the administration is you just set really aggressive timelines and then you count on everybody else to figure it out. And I think it's a bit unrealistic to see a good draft, Monday.
Yeah. What I did hear,
I
did hear this at the dinner last night. Apparently, the ag
It's
committee
an
is
Ellie
dropping.
exclusive.
Oh my god.
Oh my god.
That's the
incredible.
first time I've heard that. That's hilarious.
Okay.
Okay. All right.
That was terrifying.
Shout out
were you
to
scared?
Taylor.
I was scared for a
It's
second.
an Ellie
I thought-
exclusive.
I thought something went
That
wrong
is
with the recording,
so
and we were like
creepy.
dropping.
Okay.
Okay. On that front,
That was amazing.
on the LA exclusive
Okay.
front, the ag committee, I think, is putting out their draft potentially next week. Someone at the dinner last night mentioned that. So that could be, that'll be the other side of the coin to watch, right? Because Senate banking is obviously deals with the banking, SEC side, and the ag committee is the CFTC commodities side. So, and at least you have that, you kind of have, what you're getting on both sides of the bill. So we'll see.
Yeah, and it sounds like we're getting close. It does sound like we're getting close, and I know there were a little sort of and you probably did some reporting on this. There was a couple sort of peacekeeping missions last week, between sort of the what we'll call the ancillary assets folks, the Senate folks, and the Clarity folks. And so, it sounds like the industry is aligned on getting something done here. And so it'll be exciting to see what actually happens, knowing that we're going into quite a busy time, not only like personally, right? So with all the holidays and everything, but also just from a Senate and from a congressional calendar perspective, going into the end of the year, avoiding a shutdown, as you alluded to. There's a lot going on. So hopefully we can continue to see progress there.
Yeah. Well, progress, I think, on a lot of fronts, right? The CFTC this week announced that it's going to let stablecoins be used as tokenized collateral. I think the significance of that probably, better than anyone, putting your legal hat on as you always do. I mean, it's the first time we see something like this in derivatives markets, right? The first time a stablecoin is going to be used for, for this purpose. I mean, I think acting chair Caroline Pham said it's a killer app to modernize and, improve capital efficiency and lower costs. I mean, I'm curious to hear your take on it, but I know the industry was really thrilled when this announcement came out a couple of days ago.
No, I think, look, I mean, it's common sense, right? Like the notion that you can't have, so there's this misconception that I think the banking industry specifically is pushing, that stablecoins are somehow more risky than traditional bank deposits. But under Genius, they're not. They're backed by T-bills, they're backed by money market funds, they're backed by very stable liquid assets. And so to not be able to use that kind of an asset as collateral is just nonsense. Like it's a disregard for the stability of the asset and the technology behind it. So, it's very exciting to see the CFTC decide that, we can understand this technology, we can understand the collateral on the back end, and, we're okay with it. So I think it was exciting progress, kind of common sense to some extent, but, exciting to see that move forward.
Yeah, for sure. And then next week we have the SEC roundtable, SEC CFTC joint roundtable on Monday. I'll actually be coming into DC for that. Will you be around on Monday for that?
We're gonna do it. We'll do it live. We'll do it live.
Do it
I won't be
live.
on the
We'll do
train.
another one of these, just not on the train.
Not on the train. Yeah. No, it should be fun.
All right, I got one more, and this was my breaking news story from my newsletter this morning.
It's
Vanguard.
an Ellie exclusive.
Here we go. Vanguard preparing to offer access to crypto ETFs for its clients through its brokerage platform. So, It's a big breakthrough, obviously, because Vanguard has stayed on the sidelines pretty much throughout this whole Wall Street embracing crypto trend, right? We saw BlackRock kind of be the first one back in, it was before January 2024 when Bitcoin spots launched, when they really got interested was sort of the back end of the year before. But competitors to Vanguard, like Fidelity and Schwab, they've been offering exposure to clients for some time now. So this is a big deal for Vanguard, and it's really in reaction to, I think, client demand is what I was told. Clients really want access to these crypto assets now, especially with the green lighting of the crypto index funds, which you've seen just this past week. We'll get into that with Zach shortly. The generic listing standards, we're going to see much more of those as well. And also just a shift in the regulatory headwinds, right? Those headwinds are turning into tailwinds. I think, these asset managers who once upon a time were thinking, okay, wouldn't touch crypto with a 10-foot pole, and that really seemed to be Vanguard's position for a long time, are sort of seeing the winds change. And, they're not going to launch crypto ETFs, as far as I know, at least right now, their own products, their own crypto ETF products, but they are considering launching their, offering third-party ETFs to their clients through the brokerage platform. So that was my scoop, but I mean, feel free to weigh in. It was a really, I was really surprised when I heard that. I was like, wow, that's a big step.
No. So Ellie, I'm actually going to scoop you on this live discussion.
Okay.
Yeah. So I reached out to. I have a good friend. I won't put him on blast, but I have a good friend I grew up with who's actually at Vanguard in a pretty senior role, and I sent him the news that you scooped, and his take was that he wishes they did it sooner.
Oh wow.
It was, yeah. So it was that they are very enthusiastic about the product offering and going into a tunnel. So we'll see how this goes.
Okay.
But they're not going to do an original issuance, but they have gotten significant client demand on the exposure side. And so it's a long time coming, and they wish that they'd offer these products sooner. It's just one of those organizations that just doesn't do financial innovation quickly. So very exciting to see.
Wow, that's awesome. All right. Well, you corroborated my reporting, Gerald, so thank you. I did reach out to Vanguard and I didn't get a response from their press team, but it sounds like it was
I got you.
right. So that's great.
Crypto in America got a response. Yeah.
I love it. Okay, great. I can update the article. All right. Well, before we lose you, Gerald, going into the tunnel, I think that's a perfect segue to get into our first guest, Zach Pandl, with whom we'll be discussing the lay of the land when it comes to crypto ETFs and what he's hearing from investors on the ground. Zach, welcome to Crypto in America Live.
It's great to be on. Thanks for having me.
Yeah, we're excited to have you and chat about that. But we also want to talk about the market dip. Let's get into what's going on. What are you seeing on your side of things? You watch the markets very closely.
Well, there's always a lot of moving parts, but we have had a bit of a pullback in crypto valuations this week. And I really think it's a double whammy of two things going on. One is paradoxically a bit stronger U.S. economic data, and that's causing us to price out the likelihood of Fed rate cuts in the latter part of this year over the next two meetings this year. So we're seeing interest rates back up and a little bit of strength in the dollar. That is definitely weighing on crypto in part. And I think there's probably something else going on, which is maybe a bit of geopolitical risk premia actually creeping into markets as well. The price of gold, the price of silver are really the tell here. The dollar is strengthening, except really versus those two assets. And you often see that when markets are pricing in a little bit more political risk premia. And there's a lot of things going on here. Government shutdown risk in the U.S., the Russia-Ukraine conflict. So really, I think crypto markets are digesting these macro factors, the prospects of Fed rate cuts, maybe some political risk premia, and it may take us a few days for this to play out until we settle down.
So Zach, I want to ask you about that gold correlation or almost lack thereof, right? So historically, I think Bitcoin has been viewed as kind of digital gold by investors, but typically it's also kind of trailed or led the S&P 500. And we've always been looking for kind of this deviation from the S&P 500 correlation or sort of a closer alignment to gold. So you mentioned that all-time high for gold in the last, I think, 2 days. Maybe we got a new one today, and definitely factored into the geopolitical risk. Do you think there's a point where Bitcoin does it lag and correlate to gold, or will it always be kind of a risk on tech asset? Like, how do you guys view that?
Bitcoin is sort of like gold, but still growing up. Gold is the past, and our view of Bitcoin is the future. They both have the same underlying macroeconomic drivers of demand, which is government debt and the risk that creates to fiat currencies, essentially. But they are different. Gold has a different buyer base, heavily invested in by central banks, nation states, for example, and Bitcoin hasn't quite gotten there yet. At the same time, Bitcoin has a lot going on that gold doesn't. There isn't $2 trillion of fintech-related stuff that's growing up around gold like there is around Bitcoin. And so I still view the underlying investment thesis as largely the same, that investors want some kind of certainty, supply certainty with their monetary assets in an environment where we have an uncertain outlook for fiat currencies, including the dollar. So that is the same for both assets, but they do have these different features. And Bitcoin is still growing up, a long way to go to catch gold's dominance in the market as a store of value.
You guys also have an Ethereum ETF. How are you guys viewing Ethereum as an investment, at the moment?
So Ethereum shares some of those features with Bitcoin. It can be thought of as a scarce digital asset. But of course, there's a different dimension to Ethereum. The way that I like to think about it is that blockchains in general have given us innovations in digital money and digital finance. And today, Bitcoin is at the center of the former, that digital money innovation, and Ethereum is at the center of the latter, that digital finance innovation. So, people are becoming more familiar with stable coins, tokenized assets, decentralized finance. There's a lot to talk about in that space, but at least for today, Ethereum is the home for most of that activity. So, it's had a great run over the course of this year as Wall Street is really waking up to the stablecoin use case of blockchains. And there'll be a lot more chapters of the story as we further deepen the relationship between this blockchain finance and the traditional financial system.
Yeah, Zach, I want to ask about how this impacts sort of the digital financial innovation piece of it, right? So you guys are obviously very interested in the future of ETFs, ETPs, it was one of the sort of OGs out there, trading at like very positive NAV, or it's a very, very negative NAV for a while. It's almost like a free Bitcoin, hack there for a while. But in terms of filings and the regulatory environment, there's a big development last week, the adoption of generic listing standards. Do you think we're going to see many more products launched under that standard, or how does that affect your outlook? I just feel like you guys have to be watching that pretty closely.
Absolutely. As some of your listeners will know, it's been a very long journey to get to this point, to get efficient ETF or ETP, exchange traded product exposure for crypto to U.S. investors, and Grayscale has really been at the front line of that since the beginning of the story. The process is accelerating now. It took a Herculean effort to get the Bitcoin ETPs approved. It's getting a little bit easier, and the latest news, as you mentioned, is these generic listing standards from the SEC last week. We don't need to kind of go into the technical aspects of that, but basically there's some criteria that if a crypto token meets that criteria, it can qualify as an exchange-traded product. And I do think investors can anticipate a significant increase in the number of assets that are available in the ETP structure. There's going to be a lot more consumer choice around this topic. But if I could also say, I'm delighted to bring that consumer choice and these more efficient products to market. I also think that it creates a degree of complexity for investors that they struggle to understand. And so there's first a lot of role for education, and Grayscale is also working on that kind of thing in addition to the kind of product efficiency, as well as sort of solutions that reduce the complexity, like index-based products. And so last week, alongside the generic listing standards, the SEC also approved our first index-based crypto ETF, the Grayscale CoinDesk Crypto 5 ETF product. And so this is broadening the scope of things available to investors, index-based investing in crypto, but also reducing some of that complexity that investors don't want to pick every token. I might have a view on Ethereum and Solana and XRP, but many investors are still getting up the curve. They just want an efficient crypto solution, and that Crypto 5 product is also a great fit for many investors.
Yeah, Zach, we've seen some redemptions over the last week or so, right? You guys converted. Obviously, it was a fund before, and now it's an ETF or an ETP. The SEC wants us to call it ETPs. But when GBTC converted back in January of 2024, we saw a wave of redemptions as investors cashed out on the discount trade that Gerald mentioned. So do you see sort of a similar pattern happening here? It happened with GBTC. It's happening with GDLC. Do you see a reckoning at some point, or is this just going to sort of maybe continue to bleed? Are you hopeful that this will kind of just be, maybe a reset and then it'll continue to go up from here?
Yeah, so Grayscale is in the business of providing the most efficient access to crypto in safe, regulated products to U.S. investors. And as the regulatory picture has changed over time, we've been able to upgrade that product structure. And for people that are familiar with some of the details of financial markets, essentially we're able to move from what looks like a closed-end structure to an open-end structure with the ETFs. And this means premiums and discounts and all these things go away in that efficient structure. In my view, this Crypto 5 product will have huge demand from investors. And in some ways, it is quite different than the Bitcoin products because we are the only a business in the marketplace today, where there were many issuers starting in January 2024. Grayscale is the only issuer able to offer this product today. So I am out educating investors about building crypto in their portfolio, and they give me kind of regular feedback that this type of diversified index investing based approach is the kind of product they're looking for. So we are delighted to continue to share that with investors, and I think it will be a great fit for many.
Yeah, I'm curious about that point about premium and discount, the way it relates to kind of the diversification. Matt Levine, who writes the great column, sort of Money Stuff, loves to say that, there's a trade of counting on investors to buy $1 worth of Bitcoin for $2, right? And I think he's more picking on kind of the digital asset treasury sort of company craze, not necessarily this sort of UX wrapper, this very efficient sort of market entry point that you're describing with what you guys have built at Grayscale. How do you guys think about the user complexity of onboarding into crypto and the education you're doing in the public markets on what these vehicles actually look like? What does that sort of conversation look like for you guys?
We strive to give the most efficient structure to investors, which today, frankly, is the ETP or ETF wrapper. And so we're trying to kind of get all of the products to that point. In some places, you don't have that, and you still have some other things going on. You're mentioning the digital asset treasury phenomenon or other kind of closed-end fund type structures where these premiums and discounts can exist. Look, I'm an economist by training, and I just try to help investors understand the basic economics of what's happening in these types of structures. And honestly, it is some level is very simple. It's just a supply-demand imbalance. Among equity investors, there is high demand for crypto exposure. And so these products trade at a premium while there's not enough of it to go around, essentially. There's a deficit of supply, and we're creating more of these structures, more of these digital asset treasury structures or debts, and you're seeing that supply-demand imbalance come into equilibrium and those premiums come down. So over the medium term, they will trade close to their net asset value, plus or minus some ability for these businesses to generate extra value. If Ethereum DAT, digital asset treasury, can do something in decentralized finance, or it can stake those assets and generate additional reward for investors on top of that, potentially it could persistently trade at a small premium to NAV. But these are just access structures meeting a demand for investors, and that's why they've been successful, frankly, is that the investor demand was there, and so issuers are eager to bring them to market.
Mm-hmm. You mentioned that you were traveling the country, speaking to investors, kind of, making them understand the product, helping them understand the product, and providing education. Who would you say is the target investor for GDLC? Is it in institutions? Is it retail? Like, who wants access to the top 5 crypto products on the market right now?
Yeah, so the buyer base for crypto assets is getting broader and broader, and there are a lot of people that are getting increasingly involved, especially different types of institutional investors, pensions, endowments, et cetera. But today, the most important audience for these products is the world of financial advisors. They are building diversified portfolios for their clients. And they have a kind of specific challenge. It's not just about kind of crypto excitement or blockchain technology. It's a specific challenge that financial advisors have. It's that large cap US stocks have been a very successful investment over the last 15 years, and many other asset classes haven't, whether it's US or global fixed income or international stocks or traditional commodities. They have not provided that the sort of return that a typical diversified portfolio is looking for. And so, is the large cap US equity game over at high valuations? And how do I keep building a diversified portfolio for the future that can service my clients, even in the face of macro risks, maybe stagflation risks or weakness in the dollar or whatever? And so really the crypto conversation is both about crypto and blockchain technology and its potential, but it's about structuring a diversified portfolio for investors. And that's why it's such a good fit and why there's interest in the Bitcoin ETPs, the Ethereum ETPs, and diversified products like GDLC.
And can I just follow up on that quickly? How have you seen that change since the launch of the Bitcoin spot ETF in January 2024?
There has been a lot of change. I mean, not so much in type, but in magnitude. I mean, I can tell you, just a couple of years ago, we do events all around the country, and the rooms were smaller and less full. When the market was at at an earlier stage in the early part of the ETFs. Now we have big full rooms of financial advisors, and really the change, I think, even if financial advisors are not ready to make a crypto allocation, and by no means everyone is making or ready to make a crypto allocation, they understand that it's imperative for them to learn about the asset class. They can no longer not have an opinion. You don't have to invest, but just like any other asset class, whether it's private equity or hedge funds or something else, any financial advisor needs to have an informed opinion. And so that's where we are today, I think, at the point of education and increasingly allocation. And that's going to continue for a couple of years as this, the buyer base gets broader and broader. And then at some stage in the future, everyone will kind of get it, and it will be a normal part of alternatives investing, just like hedge funds, just like private equity, things like that are a standard part of any portfolio that has an alternatives allocation.
Now, crypto purists might have a bit of a bone to pick with you guys. Maybe, I mean, the ETFs and these products, like what's good for crypto is obviously good for the public markets, but, not my keys, not my crypto, right? Like there is a self-custody element of the industry that's very passionate. And I'm curious how often these conversations with whether it's endowments or more sophisticated investors, financial advisors, how often does custody of the assets come up, and what do those conversations look like? Because obviously a financial advisor is not wanting to be in the business of managing 100,000 safety deposit boxes, with little slips of paper in them. Like how do you guys approach that?
Yeah, absolutely. Self-custody is absolutely core to what crypto is all about. Digital ownership is, really what we've created with this technology, and we're able to move away from a world of intermediated finance, where all our assets are the credits and debits of some kind of institution, to where we can own our own assets. So it's fundamental to what crypto is all about, and Grayscale hugely endorses self-custody. At the same time, investors are, partly interested in that, but kind of many investors want to reduce the complexity, and the ETFs or ETP products solve a lot of issues for them. One of them is custody. So you don't have to manage your own keys, as you said. It's done in professional institutional custody. And there are other elements to this as well. It's real simple things like estate planning, taxes, the relationship with your financial advisor, monitoring your portfolio with all the assets that combine. All those basic things are why the ETFs are a good solution for investors. It just creates a kind of convenience for portfolio construction. And maybe I could just add one thing, because I think maybe some people are not aware of this. If you look at the gold market, we think of gold as this fallback store of value that nations hold for worst case scenarios, right? And has that also that self-custody aspect to it. But in practice, many of the world's central banks store that gold in the basement of the New York Fed in downtown Manhattan. And the reason that and you go look at it yourself, and the reason for that is convenience. It's convenient custody for these assets, and they can always take it out if they were to need to, and an investor could always self-custody their Bitcoin should they need to. So we're just creating a good product structure for investors, but it doesn't invalidate anything about the principle of self-custody, which, as you started out by saying, is really at the root of what blockchain technology is all about.
Just going back to GDLC, when it comes to, you guys were the first ones to launch the crypto index fund. You've got a couple people on your heels now. We had Hashdex launch theirs today. We're waiting on Bitwise's Crypto 10 to be approved, I believe. But I remember when the launch of the Bitcoin spots, there was this fee war going on, right? Like everybody was coming in with the lower fee. It was basically like a race to the bottom. And correct me if I'm wrong, but I think GDLC is 0.59% fee, and I think Hashdex came out today and it was 0.5%. I'm sorry, a 0.25% fee. How are you guys thinking about fee competitiveness when it comes to the crypto index funds as opposed to the single funds, single asset funds?
It's one of several things that investors are thinking about all the time. Of course, the kind of expense ratio of these products, the track record, the manager, the service, and the education. The kind of hand-to-hand teaching that I'm doing out in the world. I think track record is a key thing in this example. We are able to launch this product now as an exchange-traded product, ETF structure, just as of last week. But we started the product back in 2018 when it was even really hard to measure the crypto market. So there's a great track record for this product. And honestly, this simple structure, top 5 tokens by market cap, has been a very effective way to invest in crypto. The GDLC product, if you look at the kind of major tokens that were around back in 2018, it has a higher return than everything except Bitcoin and Ethereum, and a lower volatility than everything except Bitcoin. So if you could go back in time and you knew, of course, that Bitcoin would be the obvious winner, you would put all your eggs in that basket. But investors are dealing with uncertainty, and so kind of diversified, automatically rebalancing index-based products are a great way to navigate a space and get effective risk-adjusted returns. And we're kind of bringing that that track record to market. This is one of the many things that investors consider when they are deciding on which product fits for them.
It's a really good point about diversification versus, over-indexing all your eggs in one basket, right? Because crypto is kind of unique in that, all follows Bitcoin, right? And so when you're thinking about, my business school classes, I can go back and talk about like efficient, frontier portfolios and, Sharpe ratios, that kind of stuff. And it does feel like with a concentration of assets being in like the top 5, you could compare that almost to like a Mag 7, which has been a very successful trade, over the last since the pandemic, basically. Do you see room for broader indexes? And obviously there's some self-interest here. We're coming to you from the SAY office. And is there more room for broader indexing, or what are you hearing from investors about even just education on what the other assets are that are out there? Like how are you guys going to look at that going forward?
Yeah, a bunch of interesting threads there. So, Mag 7 in stocks, Mag 5 in crypto. I love to think of our top 5 crypto product in that way. One thing I think to get across is I expect crypto to always be a top-heavy asset class, and there's just an underlying economic reason for that. These are network technologies like the telephone or a social media platform where they're more valuable when there are more people using them. And these types of industries are dominated by network effects and kind of winner take all or winner take most type dynamics. So even with just 5 tokens, you're capturing 90% of the investable market cap in crypto. So yes, there will be absolutely a role for broader indexes, but just 5 tokens actually gets you a very efficient beta exposure to the asset class. And I think the asset class will always be to some degree fairly top heavy when you compare it to fixed income or equities, for example. Now, beyond that, 100% there will be broader indexes, and Grayscale, while we've been in the Bitcoin business for a long time, is deeply involved in all aspects of the crypto asset class. We'd like to say from Bitcoin to BitTensor, into the kind of AI type of stuff, and everywhere in between. We offer a very broad product lineup. A lot of that today is for accredited investors, private placement funds, for accredited investors for the earlier stage technology. But we hope to kind of bring all of these things to the ETF structure, to diversified products as the industry as maturing. And one of the things that you cover a lot on your show is the legislation around this, the regulatory picture, and there's a lot more steps to go before we can kind of get everything to that structure. The market structure bill that Congress is working on is a really kind of key element to get us further down that path. So it's been a long journey already. There's a long way to go, and we will continue to be in the business of providing the best access to a diverse range of crypto assets to investors. And I absolutely am excited about lots of things beyond just the top 5. Even though I think that product is a great one-stop shop solution for certain investor types.
Zach Pandl there. He's a former Goldman economist, by the way, which is why he always has such great macro takes. I always forget about that because I feel like he's just so like crypto native for the way he talks, right? But anyway, Gerald, how you doing? Are you hanging in there on the Amtrak?
I'm good. I was just thinking, Ellie, that we were joking yesterday about checking in with him on the Argentina bailout. So I'm upset. We didn't ask about that this time, but we'll get him back on. But yeah, we're still moving here. We're still seeing the crypto in America is about America, right? So we're seeing the countryside here. We're out here with the people.
That's
so we're hanging in there.
We should do this on a train. That would be really cool. I mean,
roadshow.
Yeah, we'll think about that. In the meantime, let's go to our next segment. Jacquelyn was in Korea this week in Seoul for the Korea Blockchain Week. She hosted a couple panels there. So we checked in with her earlier this week, and she gave us a breakdown of what's going on over there. So let's roll that tape.
Hey, Jacquelyn, how's it feel to be the first foreign correspondent for Crypto in America? It's great to see you bright and early over there.
It is great. Good morning from Korea. We are recording this. I'm in the future, and you guys are in the, I don't want to say past, but you guys are in the present of the Eastern Standard Time Zone. So it's like 6 a.m. here in Korea right now, but I'm excited to talk to you guys.
How is it over there? I've never been. I'm low-key jealous and definitely am going to go next year. But what's it like? I don't know, from a culture perspective.
Culturally extremely different than what Americans are used to. Everyone here is obsessed with like the cute kawaii like culture. They have a lot of K-pop things like Labubus. You guys are familiar with Labubus, right? I do not own one,
but they've onshored. Yeah, Labubus are,
for sure. But like here, it's like everywhere. They also love skincare. They love crypto here. So the reason I'm in Korea, which I'm sure we'll get into, is I'm at the Korea Blockchain Week conference, and essentially every like person, I would argue, in the audience is like retail, and they are like clamoring for every single piece of merch, any airdrop, any like asset that they could get at this conference. It's honestly amazing to watch because it's like so different than like the institutional professional kind of conferences that we attend from time to time. So
yeah, it's interesting. There was a moment, I think it was a year or two ago, where volume on crypto exchanges actually flipped like TradFi exchanges in Korea over there. So I know it's a huge market. Yeah. Like Say has a big presence over there, so it's exciting to see.
Yeah, when teams list in Korea, they like typically see an uptick. Not financial advice, but Yeah.
No, on that note, I'm curious. Like we were talking a little bit before we started recording. I personally have heard from the people we have on the ground over there that vibes are like very high. Outside of locals, like how are you feeling talking to other folks from the industry over there?
Mm-hmm. It's good, honestly, and a lot of the conversations I've been having like are constantly pointing back to the positivity also in the American market. People are talking about the Genius Act. Some people are pretty optimistic about clarity and market structure, but like it just keeps coming up throughout all these different panels. Caroline Pham was here on stage, and she was talking kind of about like the optimism on her side as well. It's just kind of like a very, I would say, bullish take here. But also the Korean market is just so like driven by retail, speculation, things like that that it's kind of hard not to get like sucked into like the energy and hype that's on the ground. And there's a lot of like big players who also came to the event as well, which I'm sure we'll get into.
Yeah, let's get into that because you had panels with two big players, right? You had American Bitcoin and you also had World Liberty Financial. So two projects spearheaded by the Trump family. So tell us what you learned. Let's do American Bitcoin first. We had them on the show recently. So who was on stage with you there?
Yes, so I did sit down with American Bitcoin, World Liberty Financial, and also Diogo Monaco. He's executive chairman at Anchorage, and we had Anchorage on the show as well, so that was fun. But essentially, for American Bitcoin, it was Mike Ho, the executive chairman, Matt Prusak, the CEO, and then Donald Trump Jr., which I believe his title is strategic advisor. I think they're all like co-founders. Donald Trump Jr. phoned in essentially through Starlink. He was in the
We
Yukon.
saw that. That's
Yeah, in a cabin. So that was definitely interesting. We also started a bit earlier than anticipated because the panel before us, like, I think he was stuck in traffic. That's the other thing about Korea. The traffic is just like insane here. Like New York has nothing on it. But when they were on stage, Mike talked about, why Bitcoin, why the focus on Bitcoin, how there's only 21 million institutions coming in, like BlackRock's ETF buying hundreds of millions of dollars of Bitcoin, et cetera, supply tightening, et cetera. And then Matt Prusak, the CEO, kind of talked about institutions and endowments moving into the market. And then also like the value proposition they believe for American Bitcoin, how they see it as like the best sides of a mining business and a DAT. And then they said they had 50% gross margin through the mining business opposed to like buying spot Bitcoin. So not bad. But then they also see as like blending the DAT with the mining business for like an asset-like business, hence ABTC, the newly launched stock, IPO, etc. And then of course, Don was up there and he was just kind of talking about his experience into crypto, how it's an incredible opportunity for global adoption, has the potential to disrupt so many inefficient technologies, etc. So yeah, it was a 20-minute, 30-minute conversation.
Yeah, there's a lot to unpack in there.
Yeah.
I was gonna say I'm curious. So just on the DAT side, kind of shameless plug. I've been thinking about this a lot recently, just in terms of liquidity for ecosystems and like the kind of flywheel that I think we're gonna see in the States is this like ETFs, which obviously Bitcoin is way ahead of everybody else on. There's US futures coming, so spot, potentially perps. And then obviously like the third leg of this stool is like the digital asset treasury company, and you can kind of get public liquidity out of all that. Do you see or do they seem, do you buy the bullishness on like pension funds and like retirees like coming in through those public vehicles, or did you get that sense that that's like real?
Yeah, I mean, I think it's not as much as like we would imagine, given that we work in crypto, so we see things with like very rose-colored glasses. But I think even like a small percentage is extremely valuable, right? Like 1 to like 100 basis points is a massive chunk in the broader scheme of like BlackRock's bigger vision. And then when we think about endowments, I know that I believe Matt brought up the Harvard endowment buying Bitcoin and like other institutions, et cetera. They're moving off zero. And so like as we start to see people with a lot of capital buying it, we will actually ideally see the market move as a result in a positive manner compared to just like, retail or crypto institutions buying it.
And you broke some news on stage, Jack, my girl.
I was taking a note out of your book.
I love it. So what's that news?
Yeah, so separately, not with American Bitcoin, I sat down with World Liberty Fi right after with Zach Folkman, who was one of the co-founders of that company, which the Trumps are also involved in. We talked about, USD1, its new stablecoin, its cryptocurrency, WLFI, which he said the Korean market calls Wi-Fi, which I think is kind of funny, and how like the two coexist. But then I kind of asked like, what's next? You guys have been around for about a year. Like, what are you guys going to build? And then he talked about how they're actually going to launch a debit card soon. And I was like, well, how soon? And he was like, very soon. And I was like next month? And he kept saying, very soon. So you know how it goes as a fellow reporter, we could ask these questions and get a little time frame. But essentially, that was kind of the big takeaway. And they said this would allow users to attach their USD1 and their World Liberty Financial app right into their Apple Pay. So he said it's not today, but it's coming very soon. And then it was also kind of like, oh, an app as well. So we talked about how there's a debit card, there's an app, and essentially the debit card is expected to kind of like complement the project's upcoming retail application, which again is expected to launch in the near future. So I would put money on probably by the end of the year based on the way he was talking about it. But I also know that technology timelines tend to get pushed back when things don't go according to plan internally.
So an app, they have a potential debit card coming, they have a stable coin. Would they ever launch a blockchain, their own blockchain?
Yes. I did ask that question, and he was like, let me make this very clear. We will never launch our own blockchain. Not today, not tomorrow. And I was like, so never? And he was like, yeah, never. And I was like, why? And essentially he kind of said like, oh, they're chain agnostic. They want to work with all the different blockchains. It's not part of their mission, yada, yada. But, I don't know. I feel like, we're seeing companies like Stripe and others launching chains. So I wouldn't put it past them, even if he's saying never. Never say never.
It's an interesting point though, because I think for that business to expand into like how big they want it to be, right? Like they are going to start maybe not having to step on toes, but what you just described like easily could have been like a Gemini or a Robinhood. Like those roadmaps are going to look similar. Talking about like L1s, there's plenty of partners they have on that side of things for like the DeFi infrastructure. So it could be kind of cannibally to decide to launch like an L1 too, right? Like that's a lot to bite off. And I'm sure they have the team and the resources to do it, but it's going to be interesting to see how they choose to expand in all these different ways they can.
I mean, speaking of Robinhood, he actually compared it to that. He said, oh, the app is going to be like a Venmo meets Robinhood. And so you'll get like that peer-to-peer payment, but then you also could get trading elements like Robinhood. So good buzzwords.
Sounds very heavily regulated.
Well, hopefully it is,
Yeah.
Was there any particular theme that you picked up on, Jack? Was it digital asset treasury companies? Was it stable coins? Was it tokenization, AI? I feel like all these conferences have sort of like underlying themes, right? Did you pick up on any of that at all?
Yeah, stable coins for sure. I feel like everyone's just constantly talking about it. The Genius Act passing was a talking point throughout so many conversations. I spoke with Diego Monica as well, and he was talking about kind of the opportunity now that Genius has passed that wasn't really there before. And he said, he's co-founded Anchorage, and they went the regulatory compliant way that a lot of companies just like didn't do because it wasn't possible. But now there is that opportunity there. So stablecoins was definitely a very big talking point. Tokenization came up. From my vantage point, I didn't see it as much as other conferences I've attended recently. And then of course the DAT structure was very talked about. There were a lot of booths there, people talking about their DATs, and also like the opportunity on that front. But yeah, I think those were definitely the main key points. You weren't even here, and you knew.
I've been to so many conferences this year. It's like, it's going to be one of those 5 or several. Cool. So where are you off to next? Because we're not getting you back here until I think next week. Is that right?
Yes. I mean, I will be working, but I am flying out today for the weekend to go to Bali. And then next week I will be at Token 2049. I'm doing a panel there with Tether, Paxos, and Dragonfly. So we could talk about that as well when I get back. But yep, I'll be at Token 2049, fly back from Singapore, and then I'll be back stateside by the end of the week. So next live stream, back in my seat.
Okay, we do have to, like, very briefly, while all of us are here, we have to talk about this $20 billion raise that Paolo definitely did not tell us about, or Bo. Nope. So we're going to have to bug them about that. But yeah, I mean, like, huge numbers, right? Like 20 billion, 500 billion valuation. It seems like they're just coming straight for everybody on the Tether side of things, and this like global campaign, everything they're doing, compliant infrastructure, all that. It seems super exciting. What are you excited to talk to them about in Singapore?
Yeah, I mean, it is, again, stablecoin conversation. So we'll definitely talk about that. But, I saw a lot of conversation and chatter around this at the event and also just like online. And I think a few major questions come up. Some people are saying they're going to IPO. And I remember at the Tether event in New York City that Eleanor emceed, that essentially Paulo said he would never IPO. He said he just doesn't want to deal with that. You know, they do their own attestations. They're not
The
the
reporting
type of
requirements
business.
alone are, yeah.
Yeah, it's just like
yeah.
crazy. And he's like, we don't need to do it. But then everyone's like, oh, they're raising all this money to IPO. So, I mean,
Would
we
you
could get
say,
into that. Yeah.
Gerald, private placement, is that sort of an alternative route to an IPO? It kind of like, it doesn't, you don't have to go through all those sort of like public disclosures that you would have to with a public raise. And that's probably like maybe an alternative for why Tether is choosing that direction.
Well, so for Tether, I think that a lot of that capital, this is speculative, but a lot of that capital is probably going to go towards collateral and like boosting balance sheet reserves, things like that, like building out teams, right? Like Bo has a task that he's up for, but is building out like an entire circle, right, in the United States. So it's like you need a lot of back office compliance, a lot of infrastructure. You talk to like some legal teams are very small, but you could easily be spending several $1 million on just your legal team a year or even a month in some cases. So I think there's a lot of other ways they can use capital, but the pipe thing, so private investment in public equity is one of the things that these DATs have been doing. It is, to your point, like basically a shortcut to actually having to go through the registration process and deal with the SEC and all that kind of stuff. Basically what you do is you find somebody who already did that, right? So like my thing is, God bless like small cap biotech stocks who like their FDA trial like didn't work out because then they're trading at this like $5 million market cap, $10 million market cap on the public markets. And if you have all that cash, then Tether can come in, or whoever, right, can come in and say, hey, we'd like to inject a bunch of capital into your company. Potentially, there's varying degrees of control that you can take. But the easiest way is you just give them a bunch of money. You say, look, we're changing out the board a bit, and you guys are now going to do this like different thing that you weren't doing. The NASDAQ and a lot of exchanges are putting rules in place to make it harder, or at least more cumbersome from a compliance perspective to just jump in. Like there are things that used to be you could do with just board approval versus now there are things that they're requiring a shareholder vote for. So a lot of like gamesmanship and just like the end goal for everybody is how do we get to like this public liquidity and these deeper markets, right? Like crypto market, let's call it like 4 trillion on a good day. You're talking about 40 trillion in US like public markets. So I think it's definitely a shortcut, but yeah, we'll see what they do.
That's so helpful, Gerald.
I
What a
know.
crazy perspective. Like literally that broke down so many things that I don't know, if I'm being completely honest. And I'm sure our listeners don't either. So
that's fun. I need like a whiteboard. Like we need to get one of those like John
the
Madden,
crazy
like
whiteboard
just
meme,
draw a
yeah.
circle. Yeah, the money goes over here and then over there. Yeah. No,
Yeah.
great question though. Yeah.
This is why we have Gerald on board.
One of many reasons, yes.
One
our
of
legal
many,
minds
yes, one of many.
order. Yeah. I mean, it'll be interesting to see. I'll definitely ask Paulo about it. And it also could just put the company, its valuation on par with like OpenAI, which is pretty wild because I feel like a lot of times crypto companies aren't talked about in those circles, even though maybe in our world we do. But like, I don't know if the AI or tech circles are talking about, Tether that way, but now they have no choice to probably.
Well, it's also, I mean, like these valuations. So one of the things that you have to do when you're raising capital is grow into that valuation, right? So like when you're talking about the crypto markets, yeah, like Circle, you say, all right, Circle is going to have 50 million users, 100 million users. And so that's what you're kind of projecting out of. OpenAI can probably justify that because they're definitely going to have billions of users. But if you're raising or you're putting capital into Tether, like that kind of a valuation, you're essentially betting that Tether is going to like eat the world. Like that's a stable coins will be everywhere bet, like just to have a $500 billion stablecoin company.
I wouldn't bet against Tether currently.
Yeah.
So
yeah,
good.
It's becoming like the new, right? Like people say, I would never bet against Elon Musk. I feel like this is quietly becoming well, not so quietly anymore, but coming up on something like that, right? By the way, I just saw this pop from Zoomer earlier. Tether's new valuation would make its chairman the 5th richest person in the world at a net worth of $224 billion, according to Bloomberg. Casual.
That's a really interesting. So the buried stat in there is that he owns 44% of the company. That's a lot of common equity for a chairman to have. That's pretty interesting. Which I guess comes with like if you don't have to raise a ton of capital and then all of a sudden you get huge, like that makes sense. But yeah, that's a crazy stat. That's interesting.
see how that plays out.
All right, Jacquelyn. Well, enjoy your travels. We will see you next week. Just to follow up on that real quick, SoftBank and ARK are apparently in talks to invest in Tether's private placement, Gerald. So a little breaking news there from Bloomberg today. So that's quite interesting.
It's a big deal. Excuse me, it's a big deal. We'll see how it goes.
We'll see how it goes. And we got you all the way to DC on this live stream.
We're here. We made it.
Proud of us. We made it. And thank you all for tuning in today. And we will see you all next Friday.
Thanks, guys.
Bye.